Sarah, I want to get to more of this on the banks, in fact, and get a reaction to that news that Leslie brought us at the top of the hour. So joining us here at Post 9 is Mike Mayo, senior banking analyst at Wells Fargo Securities. Are you curious as to why all the bank stocks are actually down, other than Wells Fargo, which is barely up, Mike, given, I would assume, what we heard from Leslie and from Vice Chair Barr is a positive, right?
Well, capital under the new Basel III proposal was originally going to increase by 19% for the largest banks, but we just heard it would increase by 9%. We were looking at maybe 5 to 7%. So even that cutting in half is a little bit more than I think some people had expected. This was expected, so we have a little bit of buying the rumor, selling the news.
Okay.
And the devil's in the details, so regulatory risk is just out there again.
Right. Well, give me your overall take then when it comes to capital adequacy at this point, resiliency of our banking system, and whether, in fact, you believe that it should be a lower number than what we've heard.
Well, I think as you know, I was negative on banks for 15 years.
I know you were.
And because banks were not resilient, and I would give them a failing grade. Right now, I would give U.S. banks the gold medal for resiliency.
Why?
I would give regulators a gold medal for resiliency a decade ago for everything they did, Dodd-Frank and everything that related to that. Hence my gold medal here. Look at the pandemic and how well the banks stepped up, especially operationally. Look at the regional bank mini crisis last year. The big banks were fine, despite all the naysayers, despite front pages of the papers. And look at this year's Fed stress test. That stress test was more stressful than the global financial crisis itself. And even after running this model, banks still had plenty of excess capital to support the economy. So by the Fed's own data, banks are as resilient as they've been. And this is my fourth decade, David, so I do give a gold medal to the banking industry for their resiliency. Recession or no recession, higher rates, lower rates, whatever hits you, I think banks are able to weather it quite well. Now, as to what the stocks do, what the earnings do, maybe not as, that's always can fluctuate. But in terms of what's being evaluated now by public policy, look at the big picture and how far banks have come.
Sarah has a question.
So do you think they're going to fight this, Mike, as hard as they fought the last round?
Well, the devil is in the details. I mean, for the last proposal, it started off saying the regulators would like to make bank regulation more simple, and they said that in a 1,000-page document. So I imagine there'll be a few hundred pages again. On the one hand, banks can simply, take the win. Hey, capital will be half as high as they thought before, or they could say, we're going to fight it. So look, I deal with the outcomes as opposed to whether or not to fight or not. And so right now I'd say there's a little regulatory risk. It's not as bad as before. And the big picture takeaway is peak bank regulation has passed. It's just a question of how far that regulatory pendulum swings back a little bit in the other direction. By the way, this is the month of the 25-year anniversary of the introduction of national banking in the United States. And national banking 25 years ago was perceived to create safer banks with more diversification by geographic regions and by products. And it certainly has done the trick. Another measure for the resiliency of the largest banks, look at the $7 trillion investment-grade bond market. The largest banks aren't too far from the regular corporate bond, as opposed to the regional banks, right, which are perceived more risky. So it's the largest banks. Regulation has worked for the largest banks. So there's a question of how much more you need to pile above.
Yeah.
I want to get to, Sarah earlier said you need resiliency and efficiency. I do think when JP Morgan says they have 80,000 pages for the Fed stress test, 80,000 pages for the living will, that there must be a more efficient way to ensure that banks are resilient.
All right, you mentioned the stocks as well, though. They're all down, other than Wells Fargo, which you can't talk about. Obviously, you work there. But, I remember when you sat here at the beginning of the year, you picked Citi. It looked like a very good pick for quite some time. Its performance has come down as the year has gone along. It's now underperforming a number of the other big banks. Still your favorite?
Citi is still my favorite. I don't have that short-term catalyst like here it's going to happen right now. But if I come back in 12 months from now, the stock's under $60 right now, and I still think Citigroup stock can double over the next 2.5 years simply by going back to tangible book value. David, you remember back in the old days, it used to be you go to tangible book value in the middle of a recession.
Yes.
We're just talking about them going back to tangible book value by not messing up.
I know, although it's been a really long time for them. I mean, we've talked about it endlessly in terms of how much of a discount the stock has traded at to tangible book.
Right, but they are, if they meet their targets this year, they should have among the best relationship between revenue growth and expense growth in the industry, and we expect earnings to double for the 3 years ending 2026. So we'll see if they execute. The bar is low, and I'm not giving them the gold medal yet, but in their category, you know, they have a shot in terms of the stock price.
All right, we should point out that gold medal was for powerlifting. I saw the pictures. Wow.
So Friday, Salt Lake City, I got the gold in powerlifting.
Congratulations.
And so that was my goal. And I think the industry, and the key to that, by the way, was simply not getting hurt. And the key to my Citigroup call is for them not getting hurt and not messing up.
There you go. Mike, thank you. Always a pleasure, and good to share that insight as well as to why these stocks are actually down this morning, in part because there was an expectation in the market that you might even get a lower threshold. Mike Mayo from Wells Fargo. Let's talk